Is Walmart good for America? Documentary analysis. The documentary, Is Walmart Good for America?, demonstrates the growth and strategy of the world's largest company. The documentary, divided into 5 chapters, shows the growth and procurement strategy for Walmart and how it helped the organization to flourish. The essay provides insight into the strategies of Walmart to understand if the organization is good or not for America. Walmart began with a clear intention to sell at the lowest price to American consumers. Their initial suppliers were American manufacturers. Their strategy was to have low inventory and a high turnaround. As Walmart aimed at cost-cutting, they put a lot of pressure on their suppliers to sell products at low cost and would not accept higher prices even if it was due to a rise in the raw material. When American suppliers failed to supply at a low price, Sam Walton, the founder of Walmart, started looking for suppliers abroad to gain a greater cost advantage. As a big retailer, Walmart was demanding, and the eventual outcome, as was in the case of Rubbermaid, a popular brand that made plastic products, was the degeneration of the brand. As Walmart's share in Rubbermaid's sales revenue increased, the former stopped shelving Rubbermaid's products. The company's profits dwindled, and eventually, it closed down. In another instance, the documentary demonstrates that Walmart deceives its customers with its extremely low-price displays. However, a former store manager of Walmart says that those prices are just a way to lure in customers to a specific section. The low prices are an inducement, and once the customers enter the section, they have already formed a perception that all products sold in the section are the lowest price, which is not the case. The increase in foreign procurement, especially that from China, contributed to an increased trade deficit, lower employment, and a low standard of living in America. Then in the late 90s, there emerged the phase of foreign procurement when Walmart started importing their products from Chinese manufacturers. The city of Shenzhen in China has become the hub of manufacturers that supply to the American market. For instance, TLC, a company that manufactures electronic goods, relates that most of its sales are generated from their partnership with Walmart. Thomson, a French electronics brand, had a large manufacturing unit in Circleville, Ohio, and supplied to Sanyo. When Walmart canceled Sanyo's supplies in favor of lower-cost products from China, Sanyo canceled their order of manufacturing to Thomson. This resulted in a drop in living standards and good jobs in Circleville. Some economists believe this a process of creative destruction wherein the town of Circleville lost many jobs to Walmart's aggressive procurement strategy. Their new store in Circleville will provide jobs to many in the town. However, it must be noted that these jobs will not be on par with the manufacturing jobs provided by Thomson. The Long Beach port in the U.S. is one of the largest importers of consumer products from China. However, some shipments are exported to China. The interview suggests that raw material in the form of cotton, scrap iron, and animal hide is exported to China, but the finished products are imported to America by China, and the cost of import exceeds that of the price of export, creating an enormous trade deficit. Overall, it is undeniable that the strategy Walmart adopts for its expansion is harmful to the U.S. economy. Though it mints profit and gives employment to thousands, its strategy dwindles the fundamentals of the American economy.